this, Dan Ives. How big are Nvidia's earnings on Wednesday night?
It's a Super Bowl, not just for tech earnings, but I think this market, right? I mean, the reality is that there's only one godfather of AI, and that's Jensen. And Nvidia, look, it's the foundation in terms of what demand looks like, in terms of what we're seeing. And, Gene and I talk about it often. I think it's going to be actually a huge positive growth catalyst that we see, not just for Nvidia, but for tech stocks. But it all comes down to, on Wednesday night, you're going to be able to hear a pin drop on trading floors around the world.
I just don't know, Gene, how you even plan for this. Normally, you've got the analyst estimates, you've got a little bit of a whisper number. If they kind of come in a little bit above it, it's good news. Everybody knows NVIDIA's numbers are going to be gigantic. Is that a fair statement?
Yeah, it's not only a fair statement. Back on the 28th, Jensen went at the GTC. He basically gave us the playbook through the end of next year. He said this $500 billion in Blackwell and Rubin revenue. If you take that for his word that they're going to be able to do that, now if they can get supply, that implies a 54% revenue growth rate for next year. The street's at 41%. Now it's come up from 34 to 41, but that's the gap. As I think about this, Brian, that's the gap between where they've set the bar on the 28th.
He gave us 54% revenue growth. I don't know a lot about Wall Street, except I do know this. 54% ain't going to do it when it comes to the stock, is it? It's going to have to be better than 54%, isn't it?
I don't think it needs to be better than 54 this week. I think it needs to be better than the 41 where the street's at.
Yep. And to Gene's point, look, we're just getting back from Asia, being there 3 weeks. Demand to supply for NVIDIA chips is 12 to 1. So it comes down to there's one chip.
12 people want to order for every one potential chip that exists to order.
So there's one chip in the world fueling the AI revolution. And that's why it speaks to our view that anyone that talks, and Gene and I talk about it all the time, anyone talks about an AI bubble here, we are in the third inning of where this is all playing out. And I think that's why this is an inflection point. You're going to see ultimately what the demand looks like from Jensen himself. And I view it as a bullish catalyst for tech stocks.
Here's the worry, though. Again, not a tech expert like you guys, but I do know also that technology changes. It evolves. And I think, Gene, if I was, now I guess I have to play the role of the bear-ish, right? Mm-hmm. If I was going to be the bear, I would say that what if somebody else comes out with a much better chip and all of a sudden NVIDIA's chips aren't as good as they are right now?
Well, I just don't think that's simply even in the equation, or at least over the next 6 quarters. But to your point, maybe 2-3 years down the road. And that's, I think, probably the biggest takeaway that your viewers should glean from this week is that we're still early in AI. Now, the companies that benefit from that will change over time. They'll kind of have 2-3 year chapters of growth rate. But I think that the undeniable truth here is that we have just scratched the surface in terms of where this is all going. And when I hear talk about Peter Thiel selling or SoftBank selling NVIDIA stock, I think it lands on something where they've made some money, but I think ultimately we're still so early, and there's going to be a lot of companies that are going to benefit from this over the next several years.
It feels like some big expectations, maybe as always, put on NVIDIA, but they were perhaps heightened even more by comments from Jensen Huang at their GTC event in Washington, D.C., where he talked about the big backlog for NVIDIA. So what did that do to your expectations?
Hi, Julie. Thanks for having me on the show. So yeah, I mean, Jensen's comments in Washington, he's talking about booked Blackwell and Rubin business over 2025 and 2026 cumulative. That's 500 billion of book business that NVIDIA has. And if you look at the sequential trajectory that this implies for the business, it implies that NVIDIA is going to grow its data center revenues, close to 20%. Sequentially every quarter from now until the end of 2026. And if you look at expectations, actually at consensus expectations, they definitely don't reflect that kind of upside. So that's one thing. And then if you look at things from another angle, if you look at it top down and how much NVIDIA's major customers are planning to invest, so like the capex plans of Amazon, of Google, of Microsoft, of Meta, actually they're very consistent with such a sequential trajectory. So bottom line is we think that the setup is looking very good for NVIDIA from multiple angles for the coming quarter and entering 2026.
Antoine, what do you expect to hear about supply from Nvidia? Because we know, or at least we seem to know, that demand is out there. In the past, the company has had some bottlenecks for supply. Do you think that that is still going to be an issue?
So there are multiple levels, where there could be some bottlenecks. So you have, like manufacturing the GPUs themselves. For example, you need a lot of HBM memory, you need a lot of CoWoS to package all that together and make the chip. I think Nvidia has worked very hard to secure supply, and I'm not too worried that this could be a bottleneck. There could be a bottleneck at this part of the supply chain. If you look, further down, so you have, for example, CoreWeave talking about some issues in rolling out powered AI shells. I think for now the issue is mostly isolated and probably related, to the scale of the company. If you look at the Nvidia's largest customers, I think they probably have a more diversified set of partners with whom they're rolling out these shells. So we're less concerned. And then lastly, everybody's been talking about power as an issue, like actual power, actual gigawatts. I also don't think that this is going to be an issue because there are a lot of efficiencies that we can find throughout the supply chain. So I'm not too concerned about supply being an issue in 2026.
Let's talk about the stock for a moment here, because yes, it's up something like 40% this year, but 5 of the past 8 reports, even when the company has beat, and it's usually beat, the stock goes down 5 of the past 8 times. As I mentioned, expectations are high here. So do you expect the stock to perform in line with maybe the beat that we might see from the company?
I mean, at some point, the earnings power of Nvidia, so if they actually, deliver on the booked business that the CEO shared at GTC in Washington, that means that earnings are going to approach, $9 next year. Okay, so the stock is trading like on low 20s today, that number. And as we move into 2026, the stock is going to start trading on 2027 numbers. And we already start to have a lot of visibility, from, for example, Amazon telling us that they plan to double their data center footprint between now and 2027. I think Microsoft made some similar comments. When you listen to Satya, he's telling you that the rollout is progressive and that, all these comments are making us very, optimistic about 2026 not being the peak. And so at some point, these numbers have to start getting reflected into the stock. So actually, we see the setup as very, very strong for Nvidia as we enter next year.
Antoine, if 2026 isn't the peak, when's the peak?
That's the question of the bubble. We never know when the bubble is going to burst. That's the real question about the bubble. What I can say is that near term, we already have very strong signals. 26 is really well set. I think 27 will already start to have good visibility. Now, if we look further out, I think the question is really how much capex can the economy absorb? Can the global economy absorb, And we've done a lot of work on that. We call that our replatforming general theory. And actually, there's plenty of room for the entire economy to absorb, north of $3 trillion of data center capex. We're still at $500 billion next year, for the top 4 hyperscalers. As long as the economy can extract productivity gains and continue to grow, with all this infrastructure, there is no reason to stop investing. Now, of course, we could see a pause at some point. We could see, one of the hyperscalers, for example, try to replatform too quickly, invest too quickly in its infrastructure, invest too quickly in its cash costs, so for example, in its workforce. And that could result in margins compression, that could result in a slowdown in investment. We don't know exactly when that's going to happen, but it's always a risk. But there is definitely a scenario in which between now and 2035, global data center spending, grows like 10x. So there's still plenty of room before the bubble bursts.
Does it give you any cause for concern that SoftBank and Peter Thiel both have announced they've sold their Nvidia shares in the past week or so?
I mean, for example, SoftBank sold its Nvidia shares, but to invest in OpenAI. So,
right.
It's always, where do you see most upside? And I think, there's still a bit of a question mark on if you take like the entire AI infrastructure stack from chips all the way to models and applications, some have a different view on which part of the stack is going to capture most of the value. It's not, to me, any reason to be concerned.
Want to get your thoughts so far on what you've noticed, trends you've seen from tech earnings that we've already, of course, gotten and parsed through.
Yeah, so it's always a mixed bag when it comes to this. Obviously, AI is on everyone's mind, and when it comes to Nvidia, that is, increasingly almost 90% of the revenue comes from AI and servers, so it's a big deal. And what's on everybody's wondering is there going to be an AI bubble? I'm not quite convinced there is, or rather, I think this is going to disproportionately affect different companies differently. I think Nvidia, though, is in a very strong position because of their leadership in this space, especially when it comes to hardware and the deals that they often make. That said, of course, the fact that they don't have access anymore to China is unfortunate, and the GAINS Act is going to potentially also impact their earnings because they're so far ahead, though. So I don't see them. It's a different question if you want to invest in them at this point. Obviously, they're very expensive, and I'm not sure the gains there. But if you already have it, I don't see selling as really as an option. I know that there have been some big sell-offs recently for Nvidia because of this concern, but I'm not really quite convinced yet that it's going to necessarily affect them so negatively, at least not for some time.
All right, Daniel, good to have you back as always. I'm going to ask you to put your editor hat on for a second. If you were to, maybe start writing the article for post-earnings now, or work on that and kind of put the placeholder headline of what you think it might be Thursday morning, what would you say that is right now and why?
I think they're going to do very well for this quarter. The more interesting question, I think, was going to be about what their expectations are for future revenue. I think they'll be okay through for the rest of next year, but it's going to be a question whether there's going to be a slowdown, and of course how the markets shift and change, especially with the geopolitics going on around this topic. But I think investors will be happy with the results. They just announced some more big deals with the Department of Energy for servers there. So I feel like they still have some momentum here, and they still do make some of the best hardware in this space with not enough competition really to stop them. I think the bigger questions are going to be like around China, other markets, and how politics plays into this.
Okay, and then talk to me about your thoughts on AMD. I know they've had a busy several weeks. I know that it's been a huge upside to share price as well, but did you have any lack of faith or lack of the overall conviction of AMD's real vision? Because I know Lisa Su has made some really positive commentary, but more of a long-term outlook. And AMD, well, they've always been seen as a potential second really source to Nvidia. They haven't really been that, though, over the last several years at least.
Yeah, I really like Lisa Su. I think she's done an outstanding job with the company overall, whether it's in the server space, whether it's in PC and desktop. And when it comes to AI, I think they've been making some excellent moves. Even in the consumer and professional PC space, we're seeing a lot of momentum with their AI abilities on their PCs for end users. And I think that's really great. Now, she is expecting AI data center to increase by double-digit numbers in the next 3 to 5 years. And this does pose a potential threat to NVIDIA long-term. So we're talking out, a few years from now. But if anyone could do it, I think it's going to be AMD. They've always been this company that's kind of been up against the rails, but always fought back. Intel for a long time dominated the PC space, and then AMD came back and really put Intel back on its heels. And that's still continuing to this day. So I feel like, this isn't a bluff. I think AMD definitely does have potential here to make a big impact in the AI space. And not quite as big as NVIDIA, but it can potentially eat into their market.
When you look at Microsoft and OpenAI, one of the big stories and question marks, I think, for this year was how that, partial separation, let's say, of those two was going to play out. We have a lot more of those details now. What do you think that fallout's going to be?
Yeah, so their relationship has always been interesting. They, at first, both needed each other desperately, but they're also now going off in separate directions. And they're both trying to seek avenues so they can both go into those areas without being constrained and hooked to each other, but they still want the benefits of the exclusivity that they share with each other. So, I think for Microsoft, this is still been an outstanding investment for them. It's really bootstrapped their own AI initiative. They're doing very well with Copilot, rolling it out to enterprise and businesses, and now increasingly in the consumer space, and of course the AI PC stuff. And then you have OpenAI, who now is turning itself into a different type of company. They're going to start releasing products in the coming years, and they're not going to be bound by exclusive deals with Microsoft in this space. That said, they're still going to be using Azure servers, not necessarily exclusively, but they did announce a big deal with that, so that benefits Microsoft as well. So I feel like these are two companies that both are cooperating with each other. They like working with each other. They're a little bit cautious of each other's long-term plans, but for now, this is actually very positive for both companies, and I really kind of like the deal that they signed.
Okay, and we've seen in just broadly in the tech world, we've seen a lot more of these collaborations. Like Oracle is partnering, it feels like, with everyone, or Nvidia is a customer right now of all these major players, and OpenAI also seems like it has collaborations with everyone. Does that then create any risk? And I know that you see it as a positive, but when everything is sort of tied together, does that fuel then these bubble fears that right now is being so very much voiced by the skeptics of AI?
Yeah, everyone is trying to use each other as an advantage up until the point that they can break off on their own. So, Microsoft wants to pursue its own AI initiatives, but it's using OpenAI's models basically to bootstrap itself. But both companies now can pursue AGI separately. And so that's kind of a big deal. So you're seeing a lot of these are deals by convenience, but not necessarily long-term strategy. They're doing it because they kind of have to, sort of like what Apple is doing with Google as well. Apple's doing that because it has to do that. But I think once these companies feel like they can break away and just do it on their own, they absolutely will. So I think long-term, that's going to be the play. But everybody here is just trying to get so far ahead in the market that they don't have to worry about, years from now going like, we should have done this, we should have partnered with this company, at least worked with them until we were strong enough to break off. And that's what everyone is trying to do right